Well, good evening, everyone. Welcome back to the channel. Tesla had a big earnings report today that I want to go over in this video. So, let's get right to it. So, seeking alpha is what we'll use today. And I've looked over a few highlights from the earnings report, but we're going to go over all of it in detail in this video. It's kind of confusing to me why the stock is actually popping. So we were up 2.63% today, and then we're actually up 13% in the after hours. So let's look over here, just to go over Tesla's performance so far this year. We're down 42% year to date. All three of these groups rate it as a hold. It still has an F for valuation, C for growth, A plus for profitability, D minus for momentum, and D plus for revisions. So it seems to be, if we look at this article here, there's some mixed opinions on the earnings. So I know in the past, which I've seen in a couple of quarters with Tesla, the earnings can actually meet expectations, and then the stock will drop. So Tesla has to be one of the most notoriously unpredictable stocks out there. Like right now, I definitely saw some signs in the earnings that were not very encouraging, but yet the stock is up like $20 a share. So go figure. So in summary, according to this article, Tesla reported Q1 earnings with lower than expected revenues and profits, causing concerns about weak business growth and declining margins. The company's inventory levels have been increasing, suggesting weak demand despite price cuts. And that's what we're seeing. It seems like, the electric car market may either be cooling, or because the tax credits are expiring, something's happening where it's not as hot as it was a couple of years ago. Tesla's cash flows were negatively impacted by growing inventory levels, raising concerns about its balance sheet. And this author is Jonathan Weber, so all credit to him. Oh, another engineer, just like Blake, freelance analyst covering. Okay, interesting. So, market cap of Tesla remains 453 billion. Forward PE still seems very high, even though the stock has dropped so much. Revenue growth 18.8%. So here's what I saw earlier today. The revenue of 21.31 billion, which is down 8.5% year over year, misses estimates by 950 million. So that's almost $1 billion miss. Non-GAAP earnings per share of 45 cents misses by 5 cents per share. So this article pretty much sums up over here. Let me check comments here. We've got number one. You get the first place trophy again. Welcome. Oh, speaking of engineers, here's Blake right here. If Tesla drops below $50 per share, I will become a buyer. But imagine where Tesla will be at that point. I know that sounds dreadfully low, but I only buy things when they are trading below their intrinsic value. It's a good approach for sure. One thing I want to point out, since you mentioned that, um, a lot of people are thinking of Tesla as like this, $400 stock. But I want to point out, if you factor in all the splits and things like that, going back to like 2019, 2020, the stock price was actually way, way lower than it is today on a post-split adjusted price. So, for example, August of 2019, right here where my cursor is, we were actually at a post-split adjusted price of 1466. So right now, we're actually the price of 144, which has been beat up insanely over the past year, is still 10x above where it actually was 4.5 years ago. So that's something to think about. I know a lot of us think of it as this $400 stock, and that because it's been there before, that it's just magically going to get back there. And it was, when we had the what I call the peak of the clown market in 2021, we were at 407. So it seems to be the consensus among retail investors that because it was once there, that it's just going to automatically get back. But keep in mind, that was a very unique market. That was COVID, that was stimulus checks, all kinds of different headwinds were going on at that time. So we can't just assume, okay, it was once 400, it's going to automatically get back to 400. Now, if it did, I could see Tesla and all these other ETFs, there's so many Tesla ETFs, I could see them all doing very well, with the exception of the inverse ones, of course. But that's something I want you all to take away from this video, is that historically, the price of Tesla on a post-split adjusted basis, and look, going back 10 years ago, from 2014 all the way on for a good 4 or 5 years, it pretty much stayed flat. You see, from 2014 to 2019, it was pretty much flat. It started to run up in 2019, of course, and then right before COVID. And this was a post split adjusted price, of course, because I remember at the time it was much higher. I think it split twice in there. In fact, that's something we can look at. How many times has Tesla actually split? So, this is a key point. The post-split adjusted price is much, much lower than it is today, even still. Okay, so over the life of Tesla, it split its stock twice, once in 2020 and once in 2022. The 2021 was a 5-for-1 split. The 2022 one was a 3-for-1 split. So all in all, I guess that would be if you had like one share of Tesla before August 31st of 2020, that one share became 5 shares, and then those 5 shares then would have become 15 shares. Is that right? If it was a 5-for-1, then a 3-for-1. So if you were in both of those splits, you're probably doing very well, even still, with the price at what it is today. So with that being said, all right. Oh, you didn't take part in the clown market. Oh, bummer. Well, it's funny because things change so fast in the markets. What worked in 2021 definitely doesn't work today, as far as like just the call option strategy, just, naked calls or long calls, basically, or leaps, does not work as well today as it did. Well, with the exception of like Nvidia or Meta or stocks like that. Um, so we have to constantly be adapting as investors. Okay, back to this. So some other highlights from the earnings. Should we call it earnings or lack thereof? Because I mean, they missed estimates. Okay, so let's look at this here. Analyst rating history. July 19th rated a sell. October 19th rated a sell as well. Rated it a hold December 13th. And also a sell on January 24th of this year. Interesting. So yeah, this article pretty much sums up what I wanted to cover. Tesla reported most recent earnings results on Tuesday afternoon. Company has seen its shares come under a lot of pressure, reported weaker than expected results, burned through billions of dollars of cash. Never a good sign. On the plus side, Tesla plans to introduce new models sooner than expected. So I saw an article that all of the Cybertrucks have been recalled or something like that. Someone correct me on that if that's not true. Fact check me, but I thought I saw an article that like all the Cybertrucks are being recalled at the moment, or there's some recall on all the Cybertrucks. So new models sooner than expected, which was well received by the market over. Well, they have to. I mean, they have to have something to juice their stock price, right? Let's see. Bearish rating. The shares have declined. He says that has worked out well so far. Shares have declined 24% since the article, even though the broad market is up over the same time frame. So it looks like, Tesla, well, who knows? Because it's so unpredictable. Like when it should drop, it goes up. When it should go up, it drops. It's like, inverse, reverse psychology. Okay, so there's the highlights there. The good and the bad. Okay, so business growth. The company has recorded revenues of 21 billion, which was down 9% year over year. That was the first time Tesla has reported falling revenues in a long time. But I think you have to look at as well, they've climbed up to this point over many years. They're dropping, but they're still, I'm sure, at a much higher point than they were 5 years ago. And we can look at the financials too. It wasn't all the company's fault. More importantly, the company was negatively impacted by the attack on the power supply of Tesla's production plant in Germany. Tesla did not feel a long lasting impact, but for a couple of weeks, production was impacted. Since a quarter only has 12 to 13 weeks, there was a meaningful headwind during the first quarter. Tesla's deliveries and production are not 100% tied to each other. The fact that Tesla was unable to produce vehicles at the normal rate during some weeks in Q1 does not necessarily translate into fewer deliveries and so on. I don't want to read all of that. Tesla's service business experienced the best revenue growth rate at 25%, thanks to the help of higher revenue recognition for Tesla's FSD offering. Profitability, Tesla's profitability moved in the expected direction, which is a decline. Profits have been pressured for some time. Tesla's generated an operating margin of 5.5%, which was down from 11.4%. This is a good article in the previous year. It's not quite a Blake article, but it's definitely a good article. Let's see, what else? FSD, part of the sale has been recognized in Q1. No additional cash inflow was generated. Cash flows, what we really care about. Cash flows did not experience a meaningful tailwind from increased revenue recognition from past FSD sales. So some basics here. So tailwind is good, headwind is bad. Think of like sailing a boat. Like you want the tailwind to propel the ship forward. A headwind means that the sails are not able to carry the ship forward, or it stalls basically. So headwind bad, tailwind good. When the company produces vehicles that it can't sell, working capital is growing, yada yada. During the first quarter, Tesla's operating cash flow was just 0.2 billion. Annualized, that makes for around 0.2% of the company's current market capitalization. On a free cash flow basis, where capital expenditures are accounted for, Tesla burned through 2.5 billion of cash, or 10 billion annualized. Yeah, 2.5 times 4, right? Pretty easy math. Competitors like Rivian and Lucid have received a lot of criticism for their high cash burn rates of 6 billion a year and 3 billion a year respectively. Well, guess what folks? Tesla's catching up. Tesla's cash burn rate during the first quarter was even worse. Yeah, so I assume these are annualized. Yeah, that's what it says, 3 billion a year and 6 billion. So Tesla's on pace to burn through more cash than competitors Rivian and Lucid. Not encouraging. How's High Tide doing, by the way? $2.14. I also sold out of some Hedera in other news today. They had a run up. I guess I'll buy back on a dip. Most things looked rather bleak in Tesla's first quarter. Okay, so that's that. Let me, since I still like something about Yahoo, how they show the quarterly, like I call them the hurdle rates. We'll go over that. Let's see. Why is Tesla up after hours with such poor results? I'm asking myself the same question, honestly. So, Coach, are you a long-term believer in Tesla or not? I honestly don't know, but maybe my 8 ball knows. Let's see how well it knows me. Am I a believer? Without a doubt. There you go. Um, it's tough to say, honestly. I have several friends that have Teslas. They're really cool. They're really fun to drive and all of that. But as far as long-term sustainability, I just don't know. I I I want to say, Elon Musk has done a lot of good things. He's got the SpaceX program and all of that. So I want to say yes, but I don't know at the same time. We've got a hello coach. Welcome. What is a fair price if it's too high now? That's a great question. We will actually look at that. This idea that stocks go up on good earning reports and down on bad earnings reports is 100% not true. It's pretty random regardless of what the numbers are. Well, what I see is if Wall Street sees some things that it likes, the stock will run up. So last year, Tesla got slaughtered on an earnings report that wasn't so bad. In fact, it was the second quarter earnings like a year ago today. They got slaughtered, and there was really no reason. It was actually when I first got into Tesla, which was a year ago, they got slaughtered, and the earnings report wasn't that bad. So it all depends on if there's a couple of indicators that Wall Street likes. SOXL, yeah, that one is doing really well. Okay, let's look at two more things. Let's look at something I like on Yahoo Finance. I like to look at these quarterly, uh, how they show the earnings by quarter. So let's see the 4 quarter history here, and then I want to look at this. We're going to look at what a fair price for Tesla might be based on some cash flow analysis websites. So Yahoo has it at 171, which I disagree with. I think it's probably closer to like 120. 120 or less might be the bottom at this point. That's where we're at, folks. Okay, let's see. So they beat quarter two. It was a slight beat, but if you look at the stock performance last year, this is the one I was just talking about. The stock price got slaughtered, even though it was a slight beat. Quarter one they met. Quarter two they beat. The last two they've missed. So there you go. The last two they've missed. Okay, and then Yahoo, of course, they've changed their format. Price to book 7.23. Okay, now let's go to one of these cash flow analysis sites. Let's see, Tesla fair value. Okay, the first site that comes up has it at 117, which that's probably a lowball estimate. Let's see, let me read some of these here. You keep getting FOMO when you look back at Nvidia and such, but no one knows today what'll happen in the next 10 years. Tesla could go on a run. It very well could. Honestly, it seems like if I were to sell it today, it would go on a run. But if I stay in it, it'll stay flat. It just seems like my luck personally is not always great in these. Like if I had been in Nvidia, it probably wouldn't have done what it did. That's honestly how I feel sometimes. Getting rich twice off the same stock, not likely. Well, I guess what's his name? Jeremy from Financial Education did, right? You preach growth stocks, but I don't hear you calling any out, just ones you missed. I think I've mentioned a lot of them. We've done portfolio reviews. We were looking at I mentioned a good three. There was Modine, which is a supplier of Tesla. There was 4 Star. I've mentioned that one. You got to pay close attention to me because I do rattle them off. I mentioned Nvidia a lot. I've mentioned SMCI, just to name a few. Um, and then what was the other one? It starts with a C, not CrowdStrike. It's actually one that the Ulti Fund is in. One of the best ones. Let's see what Blake says. Go to Seeking Alpha, take a look at its PEG ratio. It's currently trading at 1.76, which indicates an intrinsic value. Ooh, even lower than the 117, 82.20 per share. That's concerning. Okay. So a lot of the growth stocks that are like kind of at their steady state, so to speak, like you look at Meta, Nvidia, well, Apple. So Apple is not running up at this point, and I didn't miss Apple. I actually made a lot of money in Apple over the years, but I think there's a good, at least 10 of them that I've mentioned. Modine, if you wanted an actual gain in Tesla, look at the supplier, Modine. Starbucks, I think, is another great growth stock. Um, Let me look at while I'm at it. I think I have the spreadsheet up over here. Ulti. This is a tough business, I have to say. I try to keep all of you dividend people happy. It seems like sometimes as soon as I bash Tesla or Tesla, I'll lose followers. And then of course I talk about growth, and then it's tricky. It's a delicate balance for sure. Oh, GigaCloud. GigaCloud's another great one that I was just literally just talking about yesterday. Um, MSTR, of course. Just to name a few. So there you go. SMCI has done great. So, and don't worry, we'll cover more growth as well. Oh, you want to know my numerology? I'm an Aquarius. That's all I'm giving you. And I also look at the constellations to get stock tips too. Um, Astrology. Did I get it right? Astronomy versus astrology. I get those two mixed up very often. Oracle, I've been in Oracle too. That's another one I didn't miss out on, by the way. I've made money in Oracle. Oh, and another one. Now you've got me thinking now. Um, oh, I thought I had it. What's the one that was oh shoot. I'm drawing a blank now. Well, Amazon is a great one, of course. Um, oh, Qualcomm. Qualcomm had another great run. That one I believe has been around since the dot-com boom. Um, and it had another couple of runs after within the last few years. Oh, not to forget, let's not forget high tie. We talk about high tie all the time on this channel, right? So there's like 12 of them that I mentioned. And then VIST. You don't have to tell me the date, but you can look it up yourself and tell me. It'll take 1 minute. So you've been commenting. You've been really obsessed with my birthday for some reason. I just told you my sign, so that gives you that's all I'm giving you. I took my sign is an Aquarius. It's a February birthday. That's all I'm giving you. Okay. I'm not clicking any links. Okay, so back to the topic of the video, all astrology aside. It's a full moon, by the way. Okay, let me look at what Blake said. No, I'm not giving you more. I've given you all I'm giving you. Okay. All right. Well, I don't know what you're after, but you seem very adamant about it. Like Spock said in Star Trek, you must learn to govern your passions. Okay. Oh, what was it? Oh, this site. I'm sorry. This side discussion's got me all distracted here. I was gonna end the video like 5 years or 5 years, like 5 minutes ago. Well, I wasn't so secretive on my growth stock, so I hope you're happy with like the 12 of them that I just rattled off. And there's gonna be plenty more growth coverage. Don't worry. Okay, let's look at this one. That must be that must explain the obsession. I'm off the market, sorry. But these growth stocks are not off the market, of course. Okay. Where were we? So let's look at this one. So Blake actually has it pegged at $82, but I'll be fair and I'll say maybe 120. Of course, and if I'm right, I'm a genius. If I'm wrong, I had nothing to do with the estimate. But anyway, it's not my estimate. It's literally you Google it and the top site that comes up, they're just doing like their own cash flow analysis basically. So value investing, if we go to value investing, as of 2024, the fair value of Tesla is 117.74. This value is based on the Peter Lynch. Anyone heard of him? Fair value formula. With the current market price of 144.68, the upside of Tesla Inc. is negative 18.6%. Oh, I like this. This even breaks down the formula. Let me know about what you think about this, Blake. Uh, Cross check it here. So Peter Lynch's formula is earnings growth rate times trailing 12-month EPS. So 25 times 4.71, and this is probably not up to date, but 117.74. That's still, okay, still like what, $25 lower than what it is right now, or over that, almost 30 actually. So we've got the last 5 years from 2019 to now. Net income, 2019 was negative. Year-over-year growth, 11%. See, we had our huge growth in these 2 years. The 2 years that we had probably the biggest run up, 2020 and 2021. That was a lot to do, I think, with the clown market. And then everybody thought, well, there was tax credits. There was like a confluence of events. You know, there was the clown market. There was stimulus checks going out. There was tax credits for buying EVs, and all of those. It was kind of like the perfect storm for the stock. So I feel like I don't know, the window might have been missed. But I'm like economists. I'm great at analyzing the past, but not so great at predicting the future. That's why I subsidize my prediction abilities with the advanced equipment. If I was great at predicting the future, I'd already be retired. I'd be a multi-millionaire. Okay, so then see, we dropped from 2022 to 2023. We dropped way off from 127 or 128% all the way down to 19%. 5-year average is still here. So that seems like, no pun intended, but that seems like a fair estimate based on fair value. So anyway, let's see what other entertaining comments you all have for me here. Oh, we got a few more of you coming out of the woodwork here. Some names I haven't seen in a while. Oh, you must be a troll. I guess the downturn is over with respect to what? I'm not sure. You have to give me more context. Make a video only about those stocks and an in-depth review, please. Okay, sure, just for you. And see how you get more participation when you announce the video before going live. More fun. Well, I did. I announced this one almost 2 hours early. That's progress. Almost 2 hours early. I actually PEGI ratios for everything, but Tesla doesn't offer a yield, so PEG ratios work well for it. Yeah, ignore that guy's comment. He's a troll. Yes, I'm a huge fan of Peter Lynch. Yep. Alan Legault or Alain Legault have not seen this name in a while. I'm disappointed in Tesla. Will join the club. I sold I sold all my Tesla except enough that it goes up $13 from today's price. I will get at least my initial capital back. So tonight's entertainment was brought to you by Brian St. Pierre. He's talking about stimulus checks. Sure, they can definitely be stimulating. Downturn from last week. I don't know. We're talking about peg ratios. You're talking about pegging. So, and then you keep asking me for my birthday. So I don't know. But you're providing tonight's entertainment. So good for you. I'll send something if you tell me what. That has to be a typo. We like that tail risk. Oh, you all are funny. You all are making the video entertaining tonight. Um, okay, let's see what else we got here. Well, I think I'm about out of material. Super chat. Oh, you're tempting me. You know, have you been on here before? I've seen your name before, but I don't get the obsession with the birthday. Numerology number. Like, so I know about like the zodiac signs, but numerology number. Um, I don't know. Is it like the lotto numbers? You want to give me the winning lotto numbers? Oh no, I'm not doing this. If it was like winning lotto numbers, I'd be more inclined. Let's see. Not just for me, we would all appreciate the video on growth. You would, huh? Well, let me show you this. So I did a poll. I already spent 10 seconds and I didn't do it. So I looked up what numerology zodiac is. You don't have to give me any info. I don't know. Should I? It says no. And I take my orders from the 8 ball. See, I'm doing that. So that's like the extent. I'm not being weird. It's called a dry sense of humor. People, get it through your head. Come on. Okay, one more thing here. Let's see. One more thing. What was I gonna? That's fine. You know that's fine. What I was gonna do? One more thing. I'm all distracted now. Oh, this poll. So check this out. Brian Russell. I want to show you this, and then I'm gonna end the video. I went way longer than I was going to today. Okay. Well, I told you that. So all right. Here we go. So let me show you all something here. A little backstage tour. First, let me go over here. This is the back end. Let me go to the front end over here. Um, don't take that out of context. Okay, what I want to show here is this poll. So, to the last guy's point, so I said I was pivoting like 3 weeks ago, right? I polled all of you all. Granted, this is not what I would call a representative sample of the audience because only 138 people responded. What you want to see the most? Growth, which I would absolutely love to cover more, got 6%. The highest vote was high yield dividend ETFs, and then followed by options and then stable dividend growth. So I'm trying to stick to what the audience wants, but I definitely will do more growth for sure. But I was disappointed by the 6% poll number. So, okay. All right. Well, thank you all for tuning in. Like, comment, and subscribe if you haven't already. And we will see you all on the next one. Take care. Bye.